Welcome to week number 6 of the weekly review of the Forex calendar, starting off by having a look at the Treasury real yield curve, which is basically Treasury yields minus inflation. And it gives you sort of like a graph or chart. And if I were to compare this with gold, if you don't know already, the inverse correlation is quite strong. So if I put this over with gold and I invert that, you tend to see that the prices over long periods they tend to, or gold prices tend to follow where real yields are headed, which creates a bit of a worry because real yields did quite a surge last few weeks, but gold hasn't really fell off. So if this chart goes up as gold is inverted, means it should be falling off. Looking at real yields, I will be looking at gold to be at trading about 1680, but it's still trading way above 1800. So I'm expecting this gap to close as we move deeper into February. Last week we had quite the pivot from the ECB. They basically took the strong language away from saying we will never raise rates this year to just completely took it away, and that saw us this big rally in EURUSD. The rally started a day or so before because of a really strong CPI print, but really the overall the big move really happened on the back of ECB changing tone. But that also means for EURUSD there's more room to climb. In my opinion, we're going to see these levels higher and start converging towards 1675, 1700 level in the coming weeks. Not only for that, I'm also expecting Euro JPY to move a bit higher and explore higher levels in the 133 area, and lastly Euro GBP to comfortably start climbing above the 185 level, consolidate and then push up. One of the key reasons behind that is the German 2-year yield started breaking out of consolidation and in a level it has held for a good 5 or 6 years, and it's started moving higher now, and the projection is that it starts moving towards zero, and that puts quite the upward pressure on euro and all crosses, and that's one of the key reasons why I'm looking to buy euro across many pairs next week in lockstep. There's a couple of events that could give us sort of the volatility spark we need. Next week we have ECB speaking on Monday. Chinese are coming out of the New Year holidays, and that is usually means because they're in a sort of like a soft patch and the central bank is basically in easing mode, that could mean we have a bit of risk on, which means that some of the other assets could breathe a sigh of relief, I should say. And that's why I'm a bit more interested into maybe exploring upside the Euro JPY as well. On Tuesday, not a lot is happening. On Wednesday, we've got US 10-year bond auction. That could mean that maybe we've got a supply concession and 10-year yields will move up higher. Overall, the same call that we had for in December. Still expecting this to clip the 2% on the 10-year yield in the US. And on Thursday we have US CPI, which is really important and sets off usually big swing trades on GBP USD. And that's the last one I'm going to talk about today, GBP USD. There's one particular thing that happened on Thursday. So Thursday was a Bank of England announcement. We had this London fix level, and usually, or a lot of the times, I would say 9 out of 10 times, the London fix level will give you a swing trade, right? To work with. So since we broke below it, that swing trade will have to go to the downside. We did about 90 pips, but I'm really expecting way more on that. The only problem is with GBP/USD, the other side being USD and Euro being quite bullish, that might create a little bit of a bother to see if you're going to see deeper levels. But overall, I'm bearish because we punch underneath that. And on Thursday, post CPI, we're going to have another level to work with towards even a bigger swing trade. So that's the sort of things I'm looking at for next week. Not a lot of data, but a lot of crystal clear direction what we want to do. We're doing a repricing now of the ECB. That's really the theme for next week. That's all I wanted to cover this week. I'm wishing you and hoping you have a profitable trading week. I will catch you again next Sunday.